Hey everybody, wanted to put together this mini market update. So this is year to date. This is from January 1st through October 2023. Today is actually Wednesday, the 25th. So let's go ahead and let's take a look here. So let me see if I can get this to be a full screen. Okay, there we go. Let's move that over. Perfect. So this right here, so this is median sales price. So this is week by week. So this is all the way uh, October 22nd over through, and that was last year, through October 21st of 2023. You see the current week ending, we're at 275,000. The peak of where we were actually about 315 in the summer. If you look at this more linear, rather week by week and month by month, it's going to show just a little bit more smooth. So this is very normal. As you see, last year around this time, we had a sharp decline down to December, and then it started to bounce back up kind of into the spring market. So, but this is something to note. We'll see what it looks like in the next couple weeks. So let's take a look at next slide. This is closed sales. Again, nothing too crazy out of the ordinary. We had 455, which was less closed sales than where we were at the same time for last year. Again, you see in October, starts to decline down to January, starts to pick back up. And I'll share more about why this information is pertinent and what this means for you as a buyer and also as a seller next. Median sold price per square foot. This one had the steepest drop, $143 per square foot compared to its high of about $158. This could be for a few different reasons. This is not a main KPI that we track, not a huge indicator, but this does give us some data. So we did want to go ahead and show this. This put us at the lowest at what it was for the beginning of the year back in February. So again, something to note. Percent of list price received. So if you are thinking about writing an offer on a property and you're asking, what should my offer be? Everything in the MLS, Metropolitan Indianapolis Board of Realtors, this is everything from a small condo for $50,000 all the way up to a $5 million luxury. Everything is showing 97.8% is the average list price. So if you're in that $200,000 to $300,000 or more like $100,000 to $300,000 price point, it's probably going to be a lot tighter. You may even get higher than what list price is going to be. If you're going to be above that $400,000 price point, there's probably some negotiations. Another thing that this does not include is seller concessions, is being able to get the seller to pay for your closing costs, maybe throw in a home warranty, pay for the appraisal, etc. So, but as you see, this is down from where it was almost to 100% at the beginning or at the peak of the year, and then coming down. Where do we see this going through January 2024? It will probably be in this range. We'll probably drop another point, maybe point and a half. Percent closed above list price. Almost 1 out of 5 properties did, so exactly 18.5%. Again, we'll probably see that dip down a little bit more, so just maybe close to 10 to 12% if history repeats itself at the beginning of 2024. So what does this tell you as a buyer is that you can get a slightly better deal right now than as if you were buying in the peak of the spring summer season, where it was more than double amount of properties that were closing above list price. Or going back the slide, the higher list price versus sales price received. So let's look at another one, pending sales. This actually was good data. This showed that we actually still had a decent amount of pendings. It wasn't as big of a disparity as what it was in the summer months, where it got close to 800. We're still at 550. Really expect that to start to go down. It's pretty similar to where it was at this time last year. And as interest rates have settled, people are starting to get a little bit more used to that. But if it follows suit to where it was last year, we should start to see less and less pending sales. Median days on market's 14. The lowest, we were in single digits. It was about 5 towards kind of the start of the spring market. It got as high as almost a month and a half or so. Kind of right after Christmas, which again is very, very normal. We will see where that's going to happen in another month or so. But as for right now, 14 days is what the average days on market is. So if you see a property in 21, 28 plus days, you know that it's past the average, and they are likely going to have some negotiation room. They're probably too expensive. And it also depends on the house. If you're looking at a $600,000+ house, you would want to look at what the average days on market is for that price point versus the average, $275,000, $300,000 home that everyone wants. That's going to be a little bit more competitive, and that's probably more in the single digit for median days on market. So again, very, very important to note. Active inventory, the amount of listings that we have, not necessarily new listings, but the amount of homes that are on the market. We have less right now than what we did last year. We're almost 5,750. We're coming in just around 5,000 right now. So not a huge drop, but we are definitely a lower inventory. This should continue to go down probably until end of first quarter, beginning of second quarter 2024, and then should start to bounce back up unless we saw interest rates starting to open up and we start to see some of the sellers actually trading, some of their lower interest rate homes, putting those on the market and actually buying. So that's a whole nother conversation. But again, just kind of showing where we are with inventory. New listings. So these are new listings on the market. Again, this is very seasonal right up to Thanksgiving. We see less and less homes, or after Thanksgiving, less and less homes on the market. As you can see, kind of a big drop off there, and then it shoots right back up right after the holidays. And I would expect that exact same thing to happen. So as there is less of a demand, as there is less inventory, that can create a softening in the market. Unsold listings. This is important to note. Anyone that says that we are looking at a same situation as 2008 and the Great Recession or anything like that, there's just no data. I have seen some interesting points where people have said we're at 200 or 300% the amount of unsold listings that did not sell than where we were. And it's like, yeah, that's true, but it went from 91 to 167. So we're not in anywhere near the territory that we were in 2008. It's dramatically different. So I do think this is important for anyone that's thinking the market is going to crash or tank, or we're going to see bank owns, REOs, foreclosures. We just don't have any data for that. We are in historic lows. And then this is the mortgage rates. This is the most recent 30-year fix, just under 8%. Ouch, I know, but the silver lining to buying right now, if you're a buyer and you're thinking about buying, there is so much less competition when you're at a 7.9% than what was going to happen if rates drop back to 6% or 5.5% or even 6.5%, get a little bit more palatable. The amount of buyers that are going to enter the market at that point is going to make prices go parabolic. So I've said it before, I'm not trying to force anyone into buying right now, but if you are buying, you really need to rest on that silver lining, that there's so much less competition today. You can get some negotiation power. You can get seller closing costs. You can get inspection repairs. You can get, credits, things like that from the seller. Come springtime, that's just that's a whole nother animal. And if rates get a little bit lower than where they are today, that's going to make a lot of different changes. So I want to record this. I appreciate you staying with us. I know this is a longer, almost 9-minute video, but I hope you find this valuable. If you got any other questions, please let me know. I would love to answer them for you.